You know, I've been reminded over the last week and a half the reason that I am an investor. And you've heard me say this many times if you listen to my videos. I invest so that I can do what I want when I want. And it just so happens that my mother went into the hospital with a heart attack about a week and a half ago. She was in really, really bad shape. As a matter of fact, I had to feed her for a few meals. And I began to think about how feeding her was very similar to when I was a baby and she was feeding me. So it's interesting how the tables turn. And I want to share that with you because if you're a young investor, sometimes you lose sight of what you're really trying to get toward, which is, investing for the future. You don't know what the future holds. And so as investors, we are looking for the ability to do what we want when we want. Now, my mom is actually doing better. She is not out of the woods yet. She's got a long way to go. But the important thing is that I can be here to help do the things that I need to do when I need to do them. And that's what investing is all about. Now, today's video, I think it's going to be pretty exciting. I'm going to talk to you about the approach that I've decided to take to get some gains from the semiconductor industry. Some of you will remember that I did a deep dive on Intel last week and decided to wait on investing in Intel. But it's pretty obvious that there's going to be some gains in the semiconductor industry. And so the question is, how do I get those gains, or how do I get in on those gains without having to pick individual stocks within the semiconductor industry? So I'm going to share with you the approach that I'm taking to do that. And it might be of interest to you. So I'm excited about that part of the video. Also, I'm going to give you an update on last week's performance of the portfolio. I'll show you the dividend income. And if you've been following me for a while, you will know that I have 3 different portfolios. The first portfolio is my dividend income portfolio. It's designed for people like me who are looking for some current income from their portfolio. So if you are in that position, then that portfolio is probably of interest to you. I have a second portfolio that is a medium-term dividend growth portfolio. And if you are, in the middle of your career, that portfolio might be of interest to you. And then I've just started what I believe is a really exciting portfolio that I'm calling the Dividend Snowball portfolio. It is for people who are just starting out, people who are just starting up their investment account. So if that describes you, then that portfolio, that Dividend Snowball portfolio, might be something that you're interested in. So I'm going to update on all of those today. It's important for me to be transparent so that you can see what's going on in my portfolio. Now, each week, I will give you an update on the performance of the portfolio. And once a month, I will give you all of the details. Every buy that I've done, every sell that I've done, any options transactions that I enter into, any dividends that I receive, you're going to get to see all of that for all 3 accounts. So it's important for me that I'm totally transparent with you. You can see what I do with my money. You can see whether I'm winning or losing. And you can decide if you want to do something similar or if you want to do something just the opposite. And either way, it's fine as long as it helps you. If you like the content of this video, if you wouldn't mind hitting that like button, it lets people know that the content inside this video is worthwhile. And also, if you like videos like this, consider subscribing to the channel. I'd love to have you along for the ride. So with all of that, let's get started. There's been a lot of news lately about congressmen who are purchasing stocks, and specifically stocks in the semiconductor industry. So I thought it would be worthwhile to go try and check that out and see what's really going on. So let's do that. Recently, there's been some news headlines around certain Congress people who are making trades on tech stocks. So you can see here, this says Nancy Pelosi makes trades in these 3 tech stocks. Some of this is clickbait, but you can see that they're really targeting some of these officials. So let's go and take a look at what trades have happened in the last 90 days. This is a website called Capital Trades, and I have filtered on any trades that are going to be above $500,000. I picked 2 transaction types, buys and sells. I picked two asset types, which are going to be stocks and stock options. Other than that, I'm letting it just bring in anything that's out there. There are 4 trades. 3 are by Nancy Pelosi's husband, and 1 is by Michael McCall's wife. So you can see that Nancy's husband bought NVIDIA, somewhere between $1 million and $5 million of it, on June the 17th. He sold Visa somewhere around June 21st for about the same number. And then on May the 13th, he bought Apple. And then Michael McCall bought this stock called EPAM Systems. It seems to be a consulting firm for the IT industry. So I'm not familiar with this company, but he's bought somewhere between $500,000 and $1 million stake in that company. So while this is interesting, I don't think it really gives us any information on what stocks we need to be buying and selling. When I think of the semiconductor industry, I didn't want to jump in on Intel at the moment. I want to wait and see how well they begin to execute their strategy. But I do believe there's going to be some gains in the semiconductor industry. So the question is, how do I take advantage of that? And I'm going to take advantage of that by investing in an ETF for the semiconductor industry. Let me show you which one I picked. I've picked an ETF with the ticker symbol SOXX. It's called iShares Semiconductor ETF. You can see that year to date, this ETF is down about 33%, which kind of tracks the semiconductor industry. For the last year, it's down 15%. For the last 6 months, down 27.75%. For the last month, it's down 1%, and the last 5 days, it's actually up about 5.5%. So let's take a look at what's inside this ETF. This is Yahoo Finance. I pulled up the SOXX ticker symbol, and it shows us the top 10 holdings, which is going to be a little over half of what's in the fund. You can see that its top holding is NVIDIA, which is very similar to what Nancy Pelosi's husband bought. So that's 9.1% roughly. Then it's got Broadcom, Intel, Qualcomm, Texas Instruments, Advanced Micro Devices, Marvell Technology, KLA Corp, ASML Holding, and Analog Devices, Inc. So it gives me a good array of not only the digital chip industry, but also, I've got Analog Devices and Texas Instruments here, which is in the analog chip piece of the industry. So it's a really good cross-section of the industry. So I've decided to invest at the moment in this ticker symbol SOXX. And as the semiconductor industry moves, I would expect this ETF to move in a similar direction. So that's the approach I'm taking on the semiconductor industry at the moment. I will continue to invest in Texas Instruments. I love their business model. I think they are very well run. They've given us great performance historically. And their products, to be honest, are in longer term assets like industrial equipment and automobiles, and they're not in our cell phones. They do have some exposure to that, but not very much. In cell phone technology and laptops, which turn over very quickly. So I'm going to stay invested in Texas Instruments, and I'm going to probably raise that investment over time. But I'm also going to be invested in SOXX. So that's my approach to the semiconductor industry. Hopefully that's helpful for you. If not, maybe you could even do the opposite of that, and we'll see how it works out over the long run. Now let's do a quick portfolio update. You can see that this is week ending July the 15th. For the week overall, the portfolio was down 1.3%, while the S&P 500 was down only 0.9%. So we lost ground of 0.4% on the S&P 500. But let's take these one at a time. So the dividend yield account, which again is where I focus on current income. You can see we got dividends of $411 this past week, and this portfolio was down by 0.6%. The dividend growth portfolio, which focuses on medium to longer term growth, and mainly stocks that give good dividend CAGRs, We didn't get any dividends this week from this portfolio, and this portfolio actually dropped by $9,500 or 1.8%. Now, the new dividend snowball account you see here, we started the week out with $2,613.24. The portfolio ended up with a $2,618 balance, but I did put $50 in, which is my weekly contribution to this account, which means that the market fell by $44.83 or 1.7%. So overall for the week, I was down 1.3% or $11,254 from a market perspective. Now, on a year-to-date basis, you can see that the market change for all three portfolios together is down 6.4% versus the S&P, which is down 19.5%, still beating the market by over 13%. Now, I still have a bit of cash on the sidelines, I think around 5% of my portfolio. I will be looking to invest that. My expectations for the second quarter is that the earnings releases will come out. They may or may not be that great, but I'm expecting that some of the guidance that's given will not be as great either, putting pressure on stocks here in the short term. And then my goal would be to actually invest most of this 5% cash balance that I have sitting on the sidelines. So as you know, guys, my goal here is not to offer you investment advice. I'm happy to show you what I'm doing, but I'm not here telling you what stocks to buy. My goal in this channel is to help you become motivated or stay motivated to continue to grow your portfolio and to save and invest for the future. That's the goal I have for this channel. Hopefully that's coming across well. And I get great satisfaction from hearing from people whose portfolios are better today than they were 6 months ago. So if you got a good success story, I'd love to hear it in the comments below. But one other thing I would like to hear from you about, I've had a suggestion that for the Dividend Snowball account, that I move that from my Fidelity platform to M1 Finance, which is really more attractive, I guess, for the younger generations. And so the question I have for you is that a good thing to do? Should I move this to M1 Finance? And so if you can let me know in the comments below on that as well, I would really appreciate it. And that's it for this week. I will see you on the next video.